welcome to the Property Trio, the podcast for the sophisticated property buyer. I'm Dave Johnston, and as always, I'm joined by my fabulous two co-hosts, Mike and Cate. And today we're talking about housing targets, taxes, and Australia's structural property supply problem. The federal government says it needs 1.2 million homes over 5 years. The headlines say its flagship $10 billion affordable housing program has delivered just 2% of its 40,000 home target 2 years into the timeline. Meanwhile, median dwelling prices relative to income continue to rise and have kept rising over the past few decades. So here's the real question. Is housing expensive because of investors, or is housing expensive because supply is structurally constrained? Mike Mortlock is here to bring the quantity survey and construction lens, and Cate Bakos is here to bring the investor and buyer perspective. So let's get into it. Okay, part one, affordability. What has actually happened? So, Cate, let's start at the top. If we compare median dwelling prices to median household incomes over the last 25 to 30 years, what does the data tell us?
Well, it tells you that it's structural. Historically, median dwelling prices were roughly 3 to 4 times median household income in many Australian markets. Today, in cities like Sydney and Melbourne, that ratio is closer to 6, 7, sometimes even 8 times their income. So that's not just a rate cycle, that's a long-term shift.
So, Mike, when price to income ratios expand like that over decades, what do you think this actually signals?
Well, it signals that we have a problem, right? And the figure that Cate was talking about, I purposely sort of considered the single income household, but that hasn't necessarily been a reality this millennium. So it just signals that we have supply elasticity. So if supply responds quickly and efficiently to demand, then prices don't detach from income like that. But if supply is slow, expensive, constrained, or there's any sort of bottlenecks, then that's when we see price growth compound relative to income. So Australia's had a persistent supply friction, and that's really the starting point to understand it, I think.
Yeah. And, I think it's become much easier to lend. You've got more people on double income. So there are other factors at play. It's not just as simple as that, well, prices are times this income. It's so much more unaffordable nowadays. All right, so let's go into your part two here. 1.2 million homes, intent versus capability. So let's move to the big number. 1.2 million over 5 years. We're a fair way down the track here. The government hasn't produced and isn't on track to produce anywhere near the 1.2 million homes it strives for. What does it actually require?
I know I'd probably be accused of prattling on about this ad nauseum, but we're about to enter year 3 of that 5-year target. Of course, when it was announced, I thought it was ridiculous. There's no way we're going to be able to do it. But it wasn't really a gifted prediction. It was just, it was pretty simple. There was no tea leaf reading. If we break it down on a per year basis, we require 240,000 dwellings per year. ABS building activity shows that we've averaged about 170 to 190 per year since the program started. So to hit that 240K, we really need a 25 to 35% sustained uplift in output. So that's not an incremental improvement. That is a very big structural change.
Yeah, so that you can have political intent and really, they've probably set themselves up for a fall here. But it's really about system capability. And we know with building, that takes years to put into place. You need to change, as some governments are trying to do, you need to change legislation at a state level, a national level, particularly at a council level, to be able to push through more properties. You need to make it more affordable to build. You need to reduce taxes. You need to make it more profitable for developers. That takes time. It just doesn't change overnight. So that's the problem.
Yeah, it's a big problem, and it's a problem that we've inherited for quite some time now, right? So, look, it's a frustrating thing when you hear a politician sort of say, we're going to build 1.2 million homes. They're not going to do anything, right? Well, you could argue that they're going to do 40,000, right? That's the 10 billion housing future fund is they're going to do 40,000. But the rest is private sector. So just the government sort of saying, we're going to do this. Like, well, the reality is you're not going to do really that much at all. You're relying on private enterprise to do it. And the system that is structurally in place does not support that activity. It didn't support those numbers from the beginning. We've only really ever hit that mark once pretty much in the history of Australia, and then they started wanting to do it at a time where we had escalated construction costs, supply chain issues, we had relatively high finance costs, we had huge builder and developer insolvencies. It just wasn't going to work.
Yeah, I mean, ultimately, it's about expectation management. They've set the inappropriate expectation and they've built a rod for their own back. So, that's where we are at now. So let's clean up the headline. The AFR reported that the government's $10 billion Housing Australia Future Fund has completed about 2% of its 40,000 home target 2 years into a 5-year program. Cate, what's important to clarify here?
Well, that 2% relates to 2% of the 40,000 affordable housing target. It doesn't relate to 2% of the 1.2 million national target. They're two completely separate pipelines.
Yeah. So Mike, can you clarify, this 40,000 though should be a subset of the 240,000, shouldn't it? So therefore the country only needs to build another 200,000?
Yeah. Well, it's 40,000 over 5 years, right? So,
so it's 8,000.
It's 40,000 of the 1.2 million. And I just wanted to make that clear point because when the AFR article came about, people were sort of confusing that, how does that relate to the 1.2? Yeah, but they had a national target of 1.2 million for 5 years, but they were going to do 40,000 of them. Obviously, 40,000 over 1.2 million is very, very small. But 2% completed after 2 years means roughly we're talking 800 odd properties delivered so far. But the point that I think is worth making is that it's a fully funded, politically prioritised government housing program that is struggling to accelerate delivery. Now, a government program has lots of benefits that the public sector doesn't have, like lower return hurdles, direct capital, so they don't have to worry necessarily about financing it, and policy priority. You would assume that the approvals are a little bit easier, but of course they still face major problems. The planning approvals won't be perfect. The labour shortages exist for both public and private. In fact, there's an argument to say that public is taking from private. We're at about 7% nominal GDP in public demand at the moment, and that is directly comparable to the peak of investment during the mining boom. Construction cost escalations, the industrial instability, these are all issues that face both sides. So if the government struggles inside this environment, the private sector is actually going to be doing it a lot harder.
Yeah, and I'm right in saying I believe that I read about the CEO of that entity. She got into trouble for trying to essentially push her staff pretty hard, I assume, to get the types of outcomes that the government wanted. And, she's being dragged over the coals. I think she lost her job because of staff complaints. And yet they've produced, 2% of the expected outcome?
Well, 800 homes, and we've just done 2 years. That's not very good for a government agency's run rate. But of course, we've got to make sure that we're comparing apples to apples and understanding the time horizon of construction. But look, we'll get to that point in a minute.
Yeah. So, but they're the types of challenges, cultural challenges you can face when you try to do something that's usually done in the private sector and you try to create it in the public sector. I think unfortunately, that's the sad reality. So Mike, you've said before we've moved from a shock phase to a structural constraint phase. What do you mean by that?
Yeah, well, if we think about 2021 to 23, I know the pandemic sort of started a little bit sooner than that, but that's when we really saw the pandemic shock. So material shortages, cost escalation spikes. Of course, the builder insolvencies problem was a huge one. Construction companies still number one step of the podium for insolvencies, which is not an honour that you want. The construction cost index peaked between sort of 10 and 12% annual growth in 2022. Now escalation's closer to about 3.4% annually. About 12 months ago, the Cordell's Construction Cost Index was saying it was the lowest increase in about 20 years. The December quarter, we saw a 1% construction cost increase. So if we annualise that, we're talking 4%. So that's quite normal for construction costs. If you look at long term, it's around about 1% on top of inflation. Now, of course, inflation is a little bit high at the moment, but that's kind of okay. So volatility is really normalised, but the base cost hasn't reversed. So that's the problem. The spike was not necessarily a cyclical spike. It was a shock spike, but the base of it is structural. And so we're building off a permanently higher cost platform now.
Yeah. And that makes it very hard for the developers and anyone looking to build new property. So let's get into productivity. I think that's, as I've banged on about a lot over the last probably couple of years now, is a real issue with what's happening broadly in the Australian economy. The Productivity Commission has been blunt about construction productivity. What's the reality here, Kate?
Well, labour productivity growth in construction has been weak for decades. Output per hour worked in construction has grown materially slower than sectors like manufacturing and professional services. And it's fair to say long-term productivity growth in construction has been close to pretty flat in real terms.
Yeah, well, what was the report that just came out on the Victorian government expenditure, and was the estimate that we wasted about $14 billion?
Frightening, isn't it?
Oh my gosh.
Yeah.
It's not going to be good for productivity.
No, and I mean the CFMEU's now, the construction arm of that is in administration, but I think we can all now comfortably say that that is a criminal organisation in the way that it operates, and there's some horrible stories coming out that has got some politicians in Victoria very quiet at the moment. Interestingly, the union influence is much more sort of capital city focused. You don't have the same kind of powers when you get into the regional areas. And that is actually a sort of problem of productivity as well, because we're not talking about one big sort of base that productivity can stem from. It's quite sort of disparate with subcontractors and those sorts of things. But when we look at productivity, the whole economy has averaged about 2% productivity growth per year over a fairly long time horizon. Manufacturing is probably closer to 4%. That makes more sense. It's more there's more sort of upside that's obvious, and it's a little bit more centralised. But construction's about 0.4%. So you can't demand 30% more housing output in a sector where output per worker has not really improved for decades and decades. So without productivity reform, or at least incentives to increase productivity, the higher housing targets simply just push up costs rather than increasing the output. So the big problem is that throughput hasn't maintained. So supply can't really accelerate easily under this system.
Yep. And then that, also comes back to red tape, doesn't it? The high regulatory barriers when it comes to building new property slows things down. Yeah, there's so much in there that just is why that productivity has been so low for so long.
You talk about the government wanting to help. I think New South Wales government actually delayed some building legislation that just increased the compliance hurdles. So they just realised, oh gosh, like we are actually making it worse with our own policies, whether well-intentioned or not. I think it's it's so easy for politicians of all creeds to sort of point the finger at property investors as the reason why it's a problem. But the government has its kind of hand in the cookie jar as well. We're talking across all different types of taxes, not just new construction, but it's about $1 billion a week, like when you add up the state and federal taxes that politicians or governments are getting from property. And there's plenty of evidence to say somewhere between 35-45% of the cost of a new dwelling is not the labour and the bricks and the concrete. It's all of the approvals and the financing and the GST and all of those little components. So they've got to take some responsibility for being in the way.
Yeah. Well, exactly. They've got to stop taking too much of the money from those building their houses at the end of the day and make them jump through too many hoops to build their houses.
Yeah.
If you put it in real layman's terms. So we often talk about approvals. Is that the solution?
Well, approvals are great, but getting a DA on something doesn't necessarily get it built. For example, you might go to the process of getting an approval, but it just doesn't stack financially. And we've sort of found the lag from DA to commencement and completion has really stretched. And that time is a big cost as well. So we talk about construction costs being an impediment, but actually the time horizon for a development can be even more problematic. So detached builds pre-COVID average roughly 7 to 9 months. Post-COVID, that's now 10 to 12 months. Apartments moved from roughly 18 to 24 months, often now to 2 to 3 years. And at current finance rates,
Too long, isn't it?
Yeah, it's
far too long.
Yes.
Yeah.
And, we're talking about removing some of this red tape. And Victoria's all about this at the moment. We've had ridiculous amounts of red tape and now all of a sudden they want to make quick planning decisions. But, we're going to talk about labour. That's another conversation and a political one because we haven't got enough construction labour here and, there's all kinds of reasons why. But something that we probably haven't touched on is credit. Banks don't make it easy for developers, and they haven't ever. And for good reason, because a bad development can tank a lot of people, and no bank wants to go down with a big bad development. But there's just so many other factors here. Approval is just one tiny part of it, isn't it?
Yeah, and even
that's a good
on
point.
that point with the finance is, unfortunately, the harder the government makes it to be profitable to complete a development, banks realise that, so they make it harder for you to get finance. So it
becomes a chicken and egg there, doesn't it?
Yeah. So it's a doom loop type thing. So
I haven't heard that in ages.
So they've really it is back onto the government to really free up the capabilities to be able to build rapidly and profitably. And they are chewing up so much of the capability within that space with taxes and red tape. So let's talk about labour, as you just touched on there, Kate. What's happening there, Mike and Kate?
Yeah, look, as I mentioned before, public demand is equivalent to the peak of investment in the mining boom. So we've just had this huge pipeline of infrastructure projects, and that's all very great because we get an extra Sydney airport and you guys get your metro and all of the things that you want there.
Pretty cool.
Yeah, I haven't had a go yet. We'll have to do a live recording from the metro or something. But it just competes, right? So, the construction doesn't operate in isolation. It operates within the environment that the country's operating in, and Australia's running historically high levels of that public infrastructure investment. And infrastructure, energy and transport projects are competing for the same trades as residential housing. I've talked about this a few times. I've also talked about the impact of natural disasters on trades. That's something that I haven't necessarily scoped out to talk about today, but that makes a bit of a difference. ABS job vacancies data has shown elevated vacancy rates in construction trades in recent years. Migration increases housing demand instantly. We've talked about that for quite some time. And expanding skilled labour supply does take a long time. The government in the last couple of budgets has made some announcements for apprentices getting, $500 worth of tools, and there's incentives to hire apprentices, but it's throwing sort of toothpicks at a mountain style stuff. The residential housing competing with the government funded infrastructure in the same labour pool has caused a huge problem. It's not anti-infrastructure, it's just about sequencing and capacity management. And there's a fairly strong argument to say that we tried to do too much in the public space at a time where we needed those bodies in private construction.
Yeah, and if you take that a step back, what also might be feeding into the issues is obviously that's fed into governments taking on more debt to build the infrastructure. So they rely on the taxes from housing more, which makes it harder for them to reduce the taxes on housing, because they need that revenue to cover the interest on their ever expanding debt. So they're actually, interconnected.
Yes.
So let's look at the industrial instability. So we've touched a bit already on the CFMEU construction division, which has been placed into administration following the serious allegations in the independent review. Now Victorian Labor politicians are throwing stones at I think it was a KC who completed that review, whose name escapes me right now, to try to discredit that review, get themselves out of the shit at the end of the day that they are in for turning a blind eye to a lot of the antics that have gone on for a long period of time and wasted a lot of taxpayers' money, a huge sums based on this review at least. So let's try, if we can, let's separate here the politics from the economics.
But just and I'll hand over to Kate for this one, but just to give you an insight of some of the stuff that Queen's Council identified, the site managers were hiring what are ostensibly strippers to be like traffic management people, but then dance for on-site workers and management after hours. And there's all sorts of allegations about, females having to perform favours to be given, higher positions. Absolutely appalling and disgusting behaviour. And this is publicly funded projects. So I don't feel like there's enough community outrage about it, to be honest.
Oh, there is. I can't even speak about this. It's so vile, and we've had. This is not new behaviour at all.
No.
But yeah, it's really despicable, and it absolutely fires me up. I'm not happy about any of it, so I'm probably not the right person for this segment. What I will say though is we bring a lot of skilled migrants into our country. I have no idea why we haven't touched on bringing some skilled trades into our country. I think it's one of the greatest messes that we've created for ourselves, and the power of unions and organisations is a massive issue.
There's been some anecdotal
governments.
Sorry, Dave.
Around the country.
There's been some anecdotal evidence that unions have actually played a part in blocking skilled construction labour into the country, right? And that just goes to show that if that is absolutely true, then the powers that the union has is absolutely out of control. They're causing these structural issues just so that they can have highly inflated wages.
Yeah. And, aside from the disgusting behaviour, the sheer wastage, chat to anyone who's worked on a site throughout these construction projects and talk about the extras that they've been able to earn, whether it's just a case of being on call or coming in, sitting around in the car park because they know they can't get clearance to work for whatever reason, but they get paid a minimum of however many hours. I personally know trades that have been making amazing overtime rates on an already very strong salary for sitting in a car park and, being on their phone playing Snake and passing the time and then going home early. It's we've had enormous amounts of wastage. Some of it's in the name of safety. I understand all of that, but I think it's been a really comfortable rort for a lot of people.
Yeah. And here's the thing, like the union doesn't just operate over private housing, it runs public projects as well. So it's the same industrial environment. And when we have issues with industrial activity, it translates into pricing risk, project timelines, confidence in general. So that is a big problem.
Yeah, and then you've got the influence that unions have over the Labor Party and power plays within the Labor Party, and then you boil it down to different factions, and then if they are siding with certain unions, it ultimately comes down to whether they get to run that party or not, or if they're, leaders of that party or on the front bench of that party. So it then boils down to individual dynamics and politics, which is why the unions continue to have such sway over Australian politics, because they have such sway inside of Labor politics. Now, I'm not saying there aren't some things that unions do well, okay, just to cover that base, but obviously what's gone in here is a huge example of ridiculous waste that wouldn't happen if we weren't such a relatively wealthy nation. But I'm really concerned that we're on a gradual, long-term decline, and this is one of the reasons.
Yeah, I don't think we should be signing this off with everyone sort of hanging up, going, "Oh, they're just anti-union." I mean, unions have been a really important part of the fabric of our society. Could possibly be the reason why we don't have the wealth divide that we have in the US compared to Australia. Maybe it's because it's an older country in terms of white settlement. Who knows? But unions were an important part of Australia, so that we didn't have workers being powerless, having to agree to terrible conditions at a point, especially during depressions and those sorts of things, where people would queue up in a sea of people only to be pointed at and be excited to get a day of backbreaking labour for minimum wage, and the rest of the people going home hungry. They're really, unions are really important to Australia, and they're baked in and have done so much good. But we're talking about a criminal organisation now, with the way that the Queen's Counsel has sort of described the findings of his review.
Yeah. All right, so let's move to something that's rarely addressed honestly. So taxes on new housing. The Housing Industry Association, HIA, has highlighted that government taxes and charges can represent a significant share of the cost of a new home. We've sort of alluded to this throughout the episode. Let's break it down in a bit more detail.
Yeah, well, if we're talking about the government levies and statutory charges, HIA reporting 30 to 40% of the cost of a new house and land package can be attributed to that. So GST on new dwellings, stamp duty, infrastructure contributions, developer levies, compliance charges. It adds up very, very quick. So governments say housing is too expensive and that supply must increase, but governments are also major financial participants in housing production, and they're clipping the ticket fairly hard. I mean, like, you have any sort of conversation with an Uber driver about how much Uber takes, I think it's actually probably a little bit less than that, and it's scandalous, right? And that's a reasonable point. So I think if you tax production so heavily and regulate it to the point where it's really, really slow, then you shouldn't be surprised that supply is or when supply is struggling. It's pretty simple when you put it like that, in my head.
Yeah, I agree. I mean, we just need some governments to cut through, don't we, and go, okay, at the moment, on average, we're taking 35%, let's say, of the costs in taxes. Let's remove 5%. Like, pick a number and then pick a simple way to do it. And it doesn't have to be, but just pick a simple way to do it. And it might end up being 4.7% or 5.4%, but remove a big whack in the most simplest way you possibly can.
Yeah, but like I feel like we had an example of that in the last couple of weeks where somebody sort of called BS on a structural problem in Australia, and then the populace got bamboozled, and then we've just forgotten about it. So I don't know if you guys know what I'm talking about, but remember the independent politician who was in that review talking about beer taxes compared to offshore oil and gas? And we realised that we're getting more taxation on beer than we are gas producers. And Australia's called the lucky country.
Example.
Yeah, because
Good beer though.
Sure, but
Prefer for some of the wealth of our natural
GDP
resources
beer
being
versus oil.
siphoned off into a sovereign wealth fund.
the thing is that oil is supposed to belong to Australia. Like if it's in Australia, sure, like coal, oil, all of these resources, we're the lucky country because we're able to export that. Not every country has those resources, so we should be getting part of that. But there's a really good book called Econobabble that basically talks about the fact that governments have been giving so many concessions on taxation for resources that it's one of the most undertaxed parts of the economy. When people were commenting on the threads of that politician saying, how the hell can we tax beer than we can like resources, people are saying, oh, well, you don't understand accounting because, you know, there's research and developments or the time it costs to do all of the studies to get a mine up and running. You can feasibly make a loss and then that's tax deductible. That's sort of like, you know, company negative gearing that we don't talk about. But I don't think that fully explains it. And my example
That would be all the
of where
lobby groups just going straight to work.
Yeah, of course. And where I kind of think this was an interesting conversation that the public has been bamboozled, as I saw yesterday, Albo pulling a beer, excitedly saying, we're reducing the beer excise. I'm like, well, that wasn't actually the problem. I don't think that was the point that the independent politician, I've forgotten his name now, bald fella, that wasn't the point that he was making. Not that we tax beer too much. It's like we're not taxing these producers enough. So Albo's like, oh, look, beer's got cheaper, and everyone's like, yay. I'm like, oh, no. That's how nothing ever gets done. I'm off my soapbox.
Digressed. Here we are.
You know, I could go follow down that line of discussion, but we better keep working through
Let's pivot
property
back to
supply.
property,
Yeah.
I apologise, everybody.
No,
I'm fanning you.
we should have a sovereign wealth fund beyond the future fund. So why? But look, innovation is a big part of the solution. So why haven't we innovated more when it comes to building more homes?
I talked a little bit about this before. Construction's quite highly fragmented. I mean, we've been talking about the unions, but as I say, they don't run every project. I mean, it's highly influenced by subcontractors. So, you know, that makes it difficult because we get low research and development compared to other sectors, slow uptake of modular and prefabricated systems at scale. So obviously these things can be built on site or in a factory, but then it relies on the transport network. Yeah, and it's a bloody big country as well.
Speed up. Yeah, you can speed up builds significantly if we provide more modular and prefabricated properties.
It's really a huge opportunity. And think about some of these modular systems. They require a lot less on-site labour. And what do we have? We have a labour shortage. But we really need to incentivise companies to be investing in that. So the Productivity Commission observed that innovation diffusion in construction lags behind many industries. So if we want more homes without higher prices, we've got to learn to build them more efficiently. So we haven't modernised that production system enough.
Yeah. So let's look at how do we reframe this debate. So when the debate focuses on investor tax settings, what's missing? And so just to go sort of full circle for our listeners, you know, part of the point why you've gone through this, Mike, is to make it clear to our listeners. Often it's property investors, people who own investment properties, who are being belted around left, right, and centre by all the politicians as they are the problem because they're stealing properties away from the first-time buyers and pushing up prices. But what I've tried to really articulate throughout this episode is shining that big light on supply being the big issue, which we have actually touched on before, actually done an episode on why supply is an issue previously as well. So let's reframe the debate. What should the debate look like?
Well, I think we certainly know that the government wants to build more houses. You know, that's all the housing accord that we've talked about many times. But the policies that we've certainly ranted about, and the policies that are questionable, relate to, you know, disincentivising investors and changing the availability of existing stock. But the issue is that reallocating existing homes, it doesn't increase supply. It might change ownership patterns, but it's not increasing our number of new houses that are being built. So I think that's a fundamental problem.
Yeah, look, I agree. I don't think Australia has really a demand problem. I mean, even when immigration was at its high levels, we're not talking about 10, 20% increases in population. You know, the population is easy to sort of predict and understand. It's a delivery and coordination problem. So if we stick with stagnating productivity, if we have labour shortages, if approvals are slow and new construction's heavily taxed, then affordability just deteriorates year on year regardless of who owns the property.
Yeah, 100%. We need to build more properties and incentivise that, execute on that. So, all right, let's have a quick wrap up before we go into our gold nuggets. So, how are we hitting 1.2 million over a 5-year period, 240,000 a year, ongoing into the future?
Yeah, we're about to hit year 3 come 1 July of this. So I just think it's impossible. But if we really want to get serious about the future of housing in Australia, we need material productivity changes, we need labour changes, and we need regulatory reform and incentivisation for modernisation.
Yeah, I agree with Mike. A target without structural reform is just an aspiration. It's not an outcome.
Yeah, and look, we've got, what are they called? The Future Housing Fund or something like that, that built 2% of the properties, reasonably dysfunctional organisation, public organisation that have all the benefits to be able to build property and just we're building so few. But what about that 2% headline?
Well, I think we need to understand the time that it takes from development application to a commencement. So we would probably expect that to accelerate in the back end of that 5-year point. That's where I'm kind of prefaced before, we should make sure we're comparing apples to apples. So day one, they're not necessarily going to deliver a home. They need to set up a procurement framework. They need to make sure everything's in place. You know, they need to start the relationships with the tenderers and figure out how to do cost control, because I'm not a mathematician, but 10 billion divided by 40,000 homes, that's 250K per home. That's light. That's not going to be houses, right? So there's going to have to be some medium density in there. And those are complex properties that, you know, need traffic management plans, potentially different types of hoarding, different types of insurances, and they take some time to happen. But notwithstanding, like 2%, you know, 2.5 years in, we're not going to get anywhere near that. And I feel like the taxpayer has a reasonable right to question, what did I get for my $10 billion?
Yeah. All right. Look, that's been a great episode. Really like how you unpacked, Mike, within that, what are the key elements and drivers of why supply is such an issue in our country. That was great. And, you know, we really could dig into each of those 9 or 10 points in much more detail. So, you know, we've barely scratched the surface, but it's been really insightful. And so thanks very much for that. that's the property trio. It's substance over speculation. So before we wrap up, let's go into our gold nugget.
Now it's time for us to go mining for our gold nugget property tip of the day.
My gold nugget is that it's actually a simple issue, right? We are not building enough homes and we need to understand the reasons why. We've sort of shared them today. I think the government needs to take some responsibility and we need some help. We need some incentivization. You remember during COVID, the government stepped in very, very quickly and guaranteed bank deposits. The government could do something in and around finance to help the construction sector. So we just really need to understand that this is a crucial problem. It's a structural problem that is in the news now, but it's been in place for decades, and it's not likely to get any better unless we take it seriously and we make some decisive moves to move the needle on it.
My gold nugget is a rhetorical question, really, but what will it take for our government to reconsider visa applications into our country from those who are experienced and or skilled in construction?
Yep, I get my gold nugget is this is a macro issue. That you need to take a macro view because we get stuck in the weeds when we get down into the detail and more detail. So, we need to look at what are big macro solutions, rip the Band-Aid off and put them in place. And, some things will be imperfect as you do that, but there needs to be big changes and in various areas for supply to meet population growth. The other solution that may actually be, we may be heading that way politically, is having less new migrants into Australia. All right. On that note, I look forward to seeing you all next week. And I'm trying to think about whether this episode goes live.
I can see the cogs turning, Dave.
Our live recording. But if it doesn't, please come along and join us for our live recording, which is next Thursday, March the 5th. Is that right?
Yeah, but we haven't got all that many more tickets to share around. So yeah,
That's
if
true.
If you are wanting a ticket, do get in touch. We've been thrilled, and it's going to be. You'll get to meet our wonderful Jamie. So we'll be recording it, and the effort that's gone into facilitating the good audio gear cannot be underestimated, because this will be a broadcast episode. It's not just a fun opportunity for us to have a drink and a chat and bite with our new best friends. We're actually creating something with the right audio quality to go into our normal feed as well. So yeah, if you're scrambling for a ticket, just reach out and ask us for a favour.
And the professor called me yesterday. He's got his flights and accommodation booked. So the man, myth, the legend.
So sorry, Pete, that we've made this in the same week as the Grand Prix. That wasn't deliberate.
We're going to have to get him a box on the first corner or something.
Yeah, go to the Grand Prix. No, that was all sold out
Expensive
a long time
flights, sorry.
Yep. So we look forward to seeing some of our listeners at our live recording. We've got a great limited numbers, so it's going to be quite intimate. So we're really, really looking forward to it.
Yeah.
See you then.
See you then.